If you are not happy with your current win ratio, one of the most common reasons is because you are selecting the wrong order block or supply and demand zone, whatever you want to call it. So I want to give you a checklist to increase the probabilities of certain level or range to hold when price comes back to test it. Of course, having a higher time frame bias is crucial when selecting any order block or supply and demand zone, but I'm going to talk specifically about some keys to help you with increasing the probabilities even if you have the higher time frame bias wrong. So the first thing I want to talk about is price coming from a higher time frame reversal area or zone, basically another supply or demand zone or order block. So let's assume that price is on a higher time frame bullish trend like this. And on a lower time frame, we see a downtrend, just like this one. Let's say that we had an uptrend pushing higher, and now price is reversing. We have a nice move down. What is going on here? Let's say that we have a deep move like this on a lower time frame. Let's change the color to red. And now price is coming back to the last lower high of this lower time frame downtrend. So you know that this lower high, you can select an order block, a supply zone, whatever you like. But what is the problem? The price is already coming from a higher time frame bullish order block. So can price hold on this level and then produce another move down? It is possible. However, if we want to look for higher probability trades or levels, we have to take into consideration that price is coming from a higher time frame level. That means that the bullish order flow from this bullish white trend can overcome the bearish order flow that is coming from a lower time frame trend. So the important key thing here to understand is that obviously on a higher time frame, price has more time to accumulate longs in this example. So when price is coming from this level and now into a lower time frame, lower high, where smart money had less time to accumulate shorts, obviously the probability of price overcoming the lower time frame are higher. So we need to avoid this type of levels. Now, the second thing I want to mention about looking for keys on how to increase the win ratio is, did the order block or this zone grab internal liquidity? So what I mean with this, assuming we are on an uptrend, let's say we are on an uptrend like this, and now price is starting a retracement. Let's say we have a tiny little stop hand and then a break or market structure. This complies with the rules of looking for a potential order block, right? So we could say that this is an order block. But what is the problem? This order block didn't actually accumulate orders from the sell side liquidity. Assuming that again we are on a higher time frame bullish level, which is this one, that means that below each one of these lows there are going to be sell stops, and price didn't grab that liquidity yet. So if price starts coming back down here, I'm not saying again that this is not going to hold, but I'm saying that the probabilities of price holding on these levels are decreased because of the fact that smart money didn't grab liquidity below the internal liquidity. So price could either break here and continue going lower, or maybe you have a tiny little stop hand here and then continue going lower to grab internal liquidity. So ideally, if we want to catch into a bullish trend, we want to see the order block grabbing internal liquidity before breaking the structure. Point number 3, and this is very, very important, is this order block that we are looking for created at the level of the higher time frame order block? This is very simple, but if you're not paying attention to the rules, you might get trapped into a bad trade. So again, assuming now that we are on a downtrend, let's say that this is the higher time frame, and let's say that we have here some kind of distribution, break or market structure, and price initiated a downtrend just like this one. So of course, in a distribution, we know that all of this is the area where smart money accumulated shorts from, not specifically the last push up, which can be seen as a main order block. But when we talk about a distribution, you know, it's more of a trading range that rather than just simple move that grabs liquidity. So in this case, this is the higher time frame order block, right? So what happens? If we want to look for a higher probability order block, we want to see our order block created around this area. So let's say that price is pushing higher and then we have a break or market structure. We did grab internal liquidity here, we did stop hunted some highs here, but price is not yet touching the higher time frame order block. If you understand how mitigation works, you will know why is that important. If you don't know what mitigation means, let me know in the comments. I might do a video of that in the future. So ideally, we want to see the order block being created at this level. If we have the setup here built inside of the higher time frame order block, then this is a higher probability order block. Number 4, this might get a little bit tricky, so pay attention to this one. Did the order block break a major structure? In other words, is the order block breaking a minor structure from the lower time frame, or is it also breaking a major structure from the higher time frame? So what do I mean with this? Let's say that we are on an uptrend like this, right? Let's say a price grab liquidity on a lower time frame, internal liquidity, and now we have a break or market structure on the lower time frame. This break or market structure is happening after price grab liquidity below the lows here internally is being built at the higher time frame. So what happens? Let's say that we have a deep move up like this on the first break or market structure, and we don't have a chance to enter a trade on a discount level. If price is coming back down, retracing into the order block without having broken this high, there is still a chance for price to make a lower low, basically, in other words, a complex pullback before pushing higher again. So it will be best, if you didn't have the chance to enter here, to wait for a clear break or market structure of the higher time frame, basically above this high, before looking at this order block, because it's, again, if it doesn't break the high and you didn't have the chance to capture this move up, basically you didn't have the chance to put your stop loss at break even or in profit, then when it's coming back to test, it's going to be a less probable order block. And now fifth but not least, let's talk about if the order block is built around equal lows or equal highs, depending on if we are bullish or bearish. So let's say one more time, just as an example, we are on a downtrend now, and on the lower time frame we see price creating a downtrend and then an uptrend coming back to test this higher time frame point of interest or order block, and price here starts building equal highs, equal highs, equal highs, equal highs, and breaks lower. So what is this telling me? There is a lot of buy-side liquidity here that has been created and price didn't take it before breaking lower. So in this case, it will require further confirmation to take the trade. So if price breaks lower here, it might still tap into this level respecting the higher time frame order block before going lower because of the amount of liquidity that was generated at these levels. So it's ideal to look for order blocks that are built within equal lows or equal highs, because you know these levels act as magnet for price. So of course we want to avoid being the liquidity that my money is seeking to stop hunt. These were the 5 top keys that I consider based on my experience that will help you find a higher probability order block or supply and demand zone. There are other types of confirmation, especially when we talk about volume and volume spread analysis, which I use on the mentorship. If you are interested on that, of course, you can check the link in the description. To give you a real scenario, this is a chart I posted recently on the Academy. This was my midterm bias for CAD CHF. And we are going to go now and check why I did think that price was likely going to do this, applying these 5 keys. So as you can see from this real-time chart, this analysis played out quite nicely. Price respected the order block and now is pushing higher. So we are going to see now how, applying these 5 simple keys, you could have done exactly the same. So the first question is price coming from a higher time frame reversal area? If we zoom out a little bit, the higher time frame reversal area is up here where we have an imbalance and we have the bearish order block. And at the moment, when I was analyzing this pair, as you can see, price wasn't coming from that level. So the first one is a simple no. Price is not coming from a high time frame reversal area. Did the order block grab internal liquidity? Well, as you can see, this is the order block that I was selecting at the moment. This move down is the one in charge of stop hunting these lows and this low here, which is considered internal liquidity. So it did grab internal liquidity. Is the order block created at a higher time frame order block? Well, in this case, the higher time frame order block would be all of this previous higher low, which in this case grabbed liquidity previously and pushed higher. So yes, this order block was created from a higher time frame order block. Now, did the order block break the major structure? Yes, it did. Of course, the full breakdown of this analysis can be found in the live sessions that are recorded and we do during the week on the mentorship. But for the sake of this video, we are going to make it simple, talking about these specific rules. So price was breaking a major structure, which was the last high low. So now price is coming from making a higher high. Now, is the order block being built at equal lows? So in other words, is there sell side liquidity in this case that needs to be grabbed? And the answer is no. You can see we don't see any equal low here. So there is no reason to think that price is going to go below this level. So all in all of this is for you to be able to increase your win ratio. So if you guys enjoyed this video, don't forget to leave a like and subscribe if you're not for more videos.